Hey there, it's Trisha with Easy E-mini Trade, and I'm going to show you a couple different ways that you can get into the market on different time frame or tick frame charts. When the market is this volatile, you definitely need a bigger chart than a 4, 5, or 6 range chart. Otherwise, you're going to be banging your head against the wall trying to get into the trade. So I'm just going to show you a couple different options of ways to get in. And I'm going to do a webinar on Thursday to show you some Slinky advanced entry techniques. So we'll go over the Slinky on Thursday, just real basic, but I'm going to spend the majority of the time going over some of those advanced entry techniques. And I think that you'll be able to put them to use for sure in this type of market on any size chart that you would like to trade off of. So I'm just going to kind of show you how I've been making the volatility I guess work for me, or basically not get beaten up too badly by it. So let me get going here. If you want more information on the webinar, just go to my site easyminitrade.com and you can get all the information there. Just check, just click on the tab at the top that says upcoming webinar info. Okay, so this is the NQ. I'm just going to disconnect from data right now on Sierra, just so it's not whipping around while I'm trying to explain this. I'm just going to disconnect. All right, so if the market is really fast, you're going to find that a range chart is going to be really difficult to get your entries in. There are quite a few times today that my entry was just jumped right over just because it was moving that quickly on the dome. Now, I have a 6 range up here for the entry, and then down here I'm using a 12 for the confirmation, and all I really care about is the double stochastic realistically. But what I've been doing is, if the 6 range or 4 range, 5 range, whatever you're trading off of, is too fast to get your entry in, then I will take an entry off. I have all these up here because all these are charts I'm willing to take entries off of. 633 tick chart, 1 minute, 2 minute, 5 minute, and then also I am willing to take an entry off the 8 range. This is Ninja with the VWAP stuff on there, but also willing to take an entry off of 8 range. Let me just get rid of my support swing lines there. So 8 range, and I'm also willing to take an entry off a 12 range. So basically what I'm looking for, if I'm going to try to take the entry off the 6 range, I want the double stochastic to agree here. And this is based on the 2 stochastics that we've always been using on the NQ to filter, or on any instrument to filter the Slinky. So if you look here, we get a buy. Technically, it doesn't really show that it's valid because we're in oversold. But obviously, if you know resistance is right above you, you can take it without the filter. What I want to show you is basically a couple of these advanced entry opportunities. So on all my charts, I always have a 90 EMA and a 200 EMA, and no matter what size chart you're looking at, you'll find that very often they will hold as support and resistance. So just FYI, here you can see on a 15-minute chart on the NQ, held the 200 up here, tried to get through and failed, and then this is holding here at the 90. Here on the 30-minute, that's the 90 EMA. So anytime you see on any of your time frame or tick frame charts that the 90 or 200 is really close by, just have a heads up that price might struggle there a little bit. So getting back to entries off some of these other charts. So right here you can see on the double stochastic on the 1 minute right here, I'm just going to circle it so you can see. So right there, you see this big space created here, right? And looking at this 1 minute, you can see it hitting the super trend stop here, the 200 EMA, the 90 EMA, and actually this falls right in line with this area right here on the 6 range. And this is yesterday's close, and you'll notice that right on yesterday's close we do have some divergence. We have lower lows in price, while on the stochastic I have a higher low. So I can take a bounce off this area. Now what's also nice about looking at that is if you're looking here at this 1 minute, you can see this big space here. So generally what's going to happen is that green line and red line are going to try to find their way toward each other. And generally what will happen, that's if there's like 40 points worth of space there in between them, and there is. Down here where, let me just tell you what it is. Down here at the bottom on the green, we're at 10.85, and up here we're at 69 and let's say 69.25. So well within that requirement of having at least 40 points worth of space, right? So it's holding support here. That falls in line with yesterday's close. So you could go ahead and buy that. Now, one thing I will just warn you about is that when you see that 40 points worth of distance, sometimes the market can just consolidate sideways rather than bouncing. So in order for this green line to find its way to red, price is either going to have to bounce or it will consolidate sideways for a while until they make their way toward each other. So looking at the 1 minute, this entry would be just fine to take. And this is just a divergence trade. In reference to the Slinky, let's say that you had a Slinky buy setting up. So right here on this 6 range, we actually do. Like I said, borderline here of being valid because it's still an oversold with that red line. But if you look where this is setting up right here, this is still right in line with that 40 points worth of space. So you could still decide to take this and look up to the next area of resistance for your next reaction area. So I've got on the time-based charts here, back to the Slinky on some of these higher time frames, I have a smaller super trend and then I have a regular super trend. And I'll go over all the settings on everything on Thursday, so not to worry. If you already know the Slinky, the settings are the same. Just looking at it on the time-based chart. So on the 1 minute, I'm willing to take a buy above the regular super trend here with the settings of 3, 3, and 3, as long as I've got confirmation from my double stochastic on that entry chart, and then at least one other higher time frame. So if I was looking to take this buy right here off the 1 minute chart, right here, a close above that super trend here would be right here. You can see that my stochastic doesn't agree for that buy off this 1 minute, so likely I'm going to pass on it. Also at that time, and I'm not, it's totally up to you if you're going to trade in the afternoon or not. I'm not trading this afternoon, but if you are, just be aware of where all the support and resistance areas were that were established pre-market. I can take it off the 2 minute, I can take it off the 5 minute. But if I'm going into, like I said earlier, the 90 EMA or the 200, I'm going to make sure I have enough room up to that, in this case, up to that area. So looking at the 2 minute here, you could see I'm getting a break here of the super trend on the 2 minute. Stochastic agrees, but it's right into that 90. So I'm going to pass on that. If you look on that 2 minute there, I'm just going to mark it so you can see right here when it's breaking the super trend. And where is it? Over here on the 5 minute. 5 minute is over here. So if I'm going to take a buy off the 2 minute, I want another time frame to agree. So looking at the double stochastic here, it does not agree for a buy because we want that green line above the red, or we want that 40 points worth of space. So that one's going to have to be a pass for me. So basically, you're looking to enter in off a larger chart and then just look to the next larger or 2 time frames larger to confirm on the stochastic. So have at least 2 charts agree. That's working out pretty well overall. Also, we have what's called a Dipsy-doodle, which is part of the advanced entry technique on for the Slinky. So I'm just going to open up this 1 minute just to find one, just to give you an example. So here's one here. So you're going to find here that the green line is above the red, and then it comes down and almost kisses. This doesn't come very close, but comes down and almost tries to kind of trade back or flow back to the red line here. And so when it pops back up, that would be a good indication of taking a buy, even though this double stochastic may not agree. And you can see we're breaking this small super trend stop here. So not the best example, but with the market whipping back and forth this morning, there's not a whole lot of great examples off the time-based chart. But let me show you on the range charts. All right, so this is an 8 range chart, and this is Ninja. I didn't disconnect, so that's why it's still moving here. But right here, and Gordon has a handy dandy indicator that marks these for Ninja 7 if anybody's interested. But right here is a good example of a Dipsy-doodle. See how the green line comes up towards the red line here? And right as we're getting that, you can see right here on this 8 range that we actually get closed below that super trend stop. So that would be a decent place to take an entry. And then what I would look at is I'd see where support and resistance areas are, and I always have them marked. But if you don't, then you would look at this swing low here as a possible reaction area. You can see it reacts there, and then it does continue going. Here's another Dipsy-doodle here, and here's another one not marked, but regardless, notice green line comes down, almost kisses that red line. Here, same thing. And right here, we're actually getting a buy, but that's into the moving averages here. So even though this does pop really well here, this would be one that I would probably pass on. This also is the VWAP right here at 1850 area. So anyway, those usually work out pretty well overall. I know the market's been crazy whippy fast, and I would just urge you guys to use this time to practice if you're unable to trade because the market's too fast. And there's nothing wrong with just sim trading during the volatility if you're having trouble getting your orders in fast enough, or the stops are too large for you to be able to trade, and only you can decide if the stop is too big or not. I will tell you that it has been challenging figuring out what side's stop to use, and the easiest way to remedy that is, you can use the super trend on whatever chart you're taking your entries from. If it's a 6 range, I would be a little bit careful about using the opposite super trend because it's been whipping around in huge swings here today. So you might want to opt for a larger chart to take those to place your stop. So if you were buying here, let's say off the 1 minute, you can start out with your stop using the regular super trend stop or even the smaller one. And this one here, the settings are 1.5 for the multiplier and 2 for the others. And then as it starts to move, you'd obviously adjust your stop. But I would definitely use something a little bit tighter once price is moving in your direction, because obviously if you're using this super trend here to trail your stop with, this is worse than your entry. So I would never go worse than my entry, because basically, this moved quite a bit. So it could have been definitely a nice profitable trade. But, to start out, you may just need to use the super trend on whatever chart you're looking at that's larger. So I hope that helps. And I'll definitely clear up a lot more on what I was just talking about on Thursday during the webinar. And I hope to see you there, and I will chat with you all later. Take care.